Hello and welcome to the Harwood Report for March 12, 2018, presented by Trade Academy. I am your host and the founder of Trade Academy, Keith Harwood. Standard disclosures: all services and content are provided for educational and information purposes only and are not intended as legal or financial advice. Consult with your financial professional before executing any trades. All right, folks, been another busy week. Saw some crazy movement, a lot of stuff going on with speculation on what the tariffs announcement was going to do, and then obviously some pulling back on whether there were exclusions or not, and now there are. And then on Friday, after the non-farm payroll came out, as everybody called it, Goldilocks, it got crushed. And so I want to look a little bit at that and talk about how I see this impacting the equity markets and get some of my game plan for the week. Been a little bit of a chop start to the week, but generally speaking, nothing too crazy. Not a runaway bull market on the day, but again, a day is never the driver of the overall long-term trend. So first, fear and greed is now up to 44. This is a lot more reasonable. There should be probably a little bit of fear in the market when there are things like tariffs. The Mueller investigation is still ongoing. We've got a Fed meeting in a couple of weeks here. We've got a couple of things that could cause some sort of a pullback in the market. Fear may still be a little bit aggressive. Maybe we should be somewhere in the 60 range. But being at 44, I don't have as big of a problem overall. I thought when we were at 10 last week that was irrational. We're starting to see some of these indicators coming around. Stocks are making new 52-week highs instead of 50, and at a more rapid rate. This extreme fear rating, I expect to start seeing flipping over towards fear or even neutrality here over the course of the next week or two, given the way that some of these individual names are running. And stock price breadth is starting to improve a little bit. This junk bond versus investment grade yield spread is kind of all over the place. There's nothing crazy I see here. And most importantly to me is the VIX. It's neutral right now, and it's teetering on greed if the market continues to firm and the VIX gets one more press lower. So let's look at equities first. So the S&P had a massive run on Friday and stalled right here basically at the high from, Tuesday the 27th. It makes sense to maybe take a breather here, but we already blew out the guys that had sold any level prior to this. To me, it seems like we're getting set up for a run back towards highs at 285. The only thing that would really negate that to me is a cross over some sort of moving average, and we haven't crossed over any of these moving averages yet. Basically, these moving averages may play a little catch up here before we start to get that pull up, but they're not that far below us given the kind of movement we've had. Just might take a couple days to get the next leg higher. Overall, I think that I have to continue with a bullish lean, but a little slower now rather than a rapid rise. And that's really what the VIX is telling us too. When we look at the VIX, it's dropped from high of 50. That was irrational, obviously, but basically 20 down to 16, and Friday's low was all the way down to 1331. The normal range, the normal range was 12 or lower, with the high end being around 13.5, 14. So I think the VIX is trying to press back into that range where a fear problem puts the VIX to 16, but otherwise it trades around 10, 11, 12. If that happens, that definitely puts us back into grind higher mode. If that doesn't happen, maybe we don't get all the way back down to 10 or 9, but getting down towards 12 is going to give us a signal for a generally healthy market. If I go to a couple of the sectors here, Qs first off are the current winner. They are at all-time highs, or made new all-time highs today and pulled back slightly, but basically they're making new all-time highs. IWM, we know IWM played some catch-up. It's not quite to new all-time highs. That is above 160.62 will be the new all-time high, so that could happen pretty quickly this week as well. So what's holding SPY back? It's the Dow Jones Industrial Average. That has been the slowest to rally. I think a lot of it's just a concern over, do these big industrial names get impacted by some of the recent announcements by Trump and others? So we'll see. Higher steel prices could have an impact on some names like Caterpillar. But generally speaking, I think that the market still tends to look for the bullish. Not a lot of easy trade in the Dow Jones options, so there's not much to do there for me, but I think that there are some trades here in the equities, in the equity indices, playing off of this continued weakness in the VIX and firmness in the market. One thing I want to note here in the VIX is that we are back into a contango. March below April, April below May, May below June, June below July. So, all these months are trading near their, or in a contango here. If I look over to the chart again, let's go over to S&Ps. The underlying here, sorry, I wanted to look at the vol. On the vol basis here, this is the VIX chart, but 9 is kind of the normal, and that correlates to that sort of 11 VIX. If I look over at IWM, slow to load here. Sorry about this. Yeah, there you go. The norm is around 13.5, and we're already there. It bumped up a little bit to 14.5 today. Qs, the norm tends to be closer to 13.5, 14, and so that's a little bit higher. So the cheapest is still IWM. That's one of those names that if it's about to break out potentially here on about a buck rally, I do like owning some calls. So right now I'm in the April 6th 162.5, and I think that's a pretty logical spot to be. So I like these April 6th 162.5 for 88 cents still, 89 cents. I think that's a good way to express a long bias for IWM to play catch up, or to continue to play catch up here. As I go to some of the other stuff here, let's start with TLT. This has been just a sideways chop here near the lows. There's nothing going on, but this kind of consolidation does set for a potential move. If we can get a little more momentum here and maybe press above 118.99, so basically call it 119, I think that's what could trigger that move to 121. Otherwise, there's not a great trade here. We've got no momentum, we've got no direction. So even though TLT vol, and I've been looking for this to play the bounce, and it's not setting up. It's gotten a little bit of a bounce today. If we're 45 cents away and vol is about as near the lows here, maybe that's how I can get this sort of setup going. I can say that, okay, either I get into the April 20th vol because it's cheap and getting cheaper, 9.5%, or I wait and above 118.99, then I look for some April 121 calls or 122 calls even, if I want to play for a little bit more of an outlier. So I'll look at that, April 121 calls on a move above 118.99. Dollar, we'll start with the dollar index. That's kind of looking the same as some of these other consolidating areas. We just see this chop up, down, up, down, up, down, and the up-down moves are getting smaller and smaller. So at some point, maybe this will break out. It seems to have found resistance here at the the 50-day moving average. Getting above the 50-day moving average maybe gets a flip there, and that starts to maybe press the market lower. But until for now, it seems like it's okay. Dollar yen, dollar can't firm here against the yen, and it's back below the 10-day moving average after running on Friday. So if this continues to break, that's very bullish for me for gold. And as I look here, gold bouncing slightly, but seems to have a good amount of upside. If this wants to try to press back down to lows, that puts us back to 128.5. Dollar yen to lows, gold to highs 128.5 looks plausible here. Excuse me, and SLV to 16.5. So I see some good upside here in the metals. GDX has already started to bounce a little more today, and that looks good for upside towards 23, and GDXJ, towards 34, 35. The spot where I have the cheapest vol is going to be in GLD. And where I'm looking at it here is on this vol basis. This is at 9.5 vol roughly. It gets down to about 9%, not much cheaper than that. So vol is already down sub 10%. Again, I can go out to April, looking for that move up towards the, I'll show again, the previous highs, which was 128, call it 129, 128.5, we'll say, for that kind of move. The 127 calls here for $1.10 aren't bad. Yeah, I get it. On a move to 128.5, they're only worth $1.40, but if it happens sooner, it picks up some benefit of vol and gamma, and there's still timed expiration. So this is something that I want to watch this week. The April's cheap. If the move starts happening a little more aggressively in dollar yen, I'll go shorten this up. But for now, my focus is going to be a little longer term, just to make sure that I have some time since there's been some chop here, and look at these April 127 calls for $1.10. And finally, let's go over to the oil names. USO was very weak this morning and has bounced back and almost fully recovered its losses. Friday was very bullish. It was tied to S&Ps on Friday. and had sort of been in this, generally oil's been down on down market days and up on up market days, and it seems like today, that's a nice sign when the market can recover that well. So what does that do? It sets me up again in XLE. I've said I'm not necessarily looking to play these from the bear side, given this potential for upside if USO presses back to new highs. This has got a lot of leverage to it, and OIH as well. And OIH is actually looking a little better than USO from XLE today. So these are names I'll talk about more in the premium product, but I wanted to just highlight them now as names that I have, a lot of interest in. I've been interested in them. I'm looking for that breakout to occur. OIH above 25.37 looks like that sets up for the big move. We're close. So I'm going to be watching that very closely to start this week. And as I mentioned, the premium product, I'll send out a newsletter this afternoon. I do an updated video in the middle of the week. I talk about more ideas, more complicated ideas, and I give away the first month for free on this if you're interested. So I urge you to sign up if you found value in anything that I talked about today, as I will go into greater depth on a lot of this other stuff. All right, folks, that's it for me for today. Go to tradeacademy.co/Harwood Report to sign up. Email me, Keith at tradeacademy.co. Call me 312-600-8004. Have a wonderful rest of your afternoon.